Right. So coming to the next case study, Rainbow Non-Bank Limited, a non-systemically important, non-deposit taking NBFC, was operating appropriately till the start of COVID. Due to unforeseen conditions under the pandemic, and after that, the operating revenue of the NBFC started decreasing. Following is the position of the net owned points of the company during the last four financial year. Right, net owned funds. So Rainbow Non-Bank Limited appointed P. Sankara and Company as their auditor for 33. Rainbow Non-Bank has been involved in refinancing of accounts payable of the other company, that is payable to the accounts payable on behalf of, that is paying to the accounts payable on behalf of the company on the due date and allowing the additional credit period by charging interest. To test for understatement in the existence or valuation of accounts payable, Abhinandan engagement partner decided to test recorded and refinanced accounts payable on a sample basis. He also decided to verify refinanced accounts payable against the signed contracts. Abhinandan did not identify any misstatement. While performing the audit procedures in the month of March 33 itself, it was noticed by Mr. Abhinandan that senior sales manager from Rainbow Non-Bank agreed to refinance the accounts payable of Opal Stones India Limited, but on the due date he issued payment to his personal account instead of issuing payments to the accounts payable of Opal Stones India Limited. The matter was flagged by him to audit committee and the amount was subsequently recovered. Due to this, Open Stones had to pay an additional amount of 4 crore over and above amount of the accounts payable of 25 crore is embezzled by the senior sales manager, right? So there is a fraud. As Opal Stones had to shell out extra funds due to above, it was proposed to file a suit against the company. However, negotiations were still going on between the two companies to settle the matter. There was no disclosure in the financial statements regarding these negotiations. No other observation was identified by Abhinandan. He is considering to express an unmodified opinion in the above situation. He has also approached the to review the working papers and the documentation. On the basis of the facts, answer the questions. While reviewing the working papers of Mr. Abhinandan, the EcoCR identified that the audit procedure followed to test for the understatement in the existence or the valuation of accounts payable refinance is not relevant. However, Abhinandan did not understand the comment provided by this EQCR. Kindly guide Abhinandan with respect to the relevance of the audit procedure by selecting the appropriate option from given below. Right, so one we think looks like a question from SPC 1 SA 220, but then we see that the question is regarding the relevance of the audit procedure. That means they are talking about SAAE, sufficient appropriate audit evidence. Sufficiency refers to the quantity, appropriateness refers to the quality, and quality means two things: it should be relevant and it should be reliable. Right, so relevant, that means there should be a logical connection which will give you the direction of the testing. And reliability, we have the principles useful in assessing the reliability of audit evidence, which we fondly remember as VIDCO. Okay, right. So relevance deals with the logical connection with or the bearing on the purpose of the audit procedure and where appropriate the assertion under consideration. In the current case, testing accounts payable by following the stated audit procedure will be relevant for testing the overstatement in the existence or valuation of accounts payable and not for checking the understatement. Okay. Relevance deals with the logical connection with or bearing upon for the purpose of audit procedure and where appropriate the assertion under consideration. In the current case, testing the accounts payable will give comfort on the completeness and valuation but not on the existence. The relevance of the information to be used as audit evidence and therefore the audit evidence itself is influenced by its source and nature and the circumstances under which it has been obtained, including the controls over the preparation and maintenance. No, all this story we are writing regarding the reliability of the audit evidence, and the relevance of audit evidence is increased when it is obtained from independent sources outside the entity. It's not the relevance, it is the reliability of the audit evidence which is increased, right? So C and D not possible. Now let us look into the options between the A and B. Okay, right? So what is the audit procedure being performed over there? To check the understatement in the existence or valuation of accounts payable, Abhinandan decided to test recorded and the refinance accounts payable on a sample basis. He's also decided to verify the repayable accounts payable against the signed contract. Right, so what is the amount written in the contract and what is the amount recorded in the books of account, and what does it say? He did not identify any misstatement, right? So what is the amount written in the contract and what is the amount recorded in the books of account, right? So generally a company, what they will try to do, liability, they will always try to show less. Like liabilities in the company, they will always try to show less, and asset they will try to show as the more, right? So what does it say? This particular testing, it will be relevant for testing the overstatement in the valuation or existence of accounts payable, right? And not for checking the understatement. And then it says it is not will give comfort for the completeness and valuation and not the existence. No, it will tell you when you check it from the contract, it will give you the evidence regarding the existence. Right? So that is why the correct option would be A. During the review of Abhinandan's working paper, the EQCR observed that Rainbow Non-Bank Limited performance was subpar with the net standing at 2.5 crore at the end of the year 22-23, with 32-33, 2.5 crore. Okay. Right. So still at the end of 32-33. The EQCR believed that Abhinandan was expected to include in the net owned funds in the auditor's certificate for the year end. However, Abhinandan disagreed with the same. Can you please provide guidance on the accurate reporting obligation in the current case? Every NBFC is required to submit a from the statutory auditor that it is engaged in the business of NBFC, requiring to hold a certificate of registration and is eligible to hold it. Certificate with reference to the position of the company as at the end of the year 31st March is required to be submitted. NBFC whose net owned funds fall below 200 lakh will submit a certificate. There is no such condition. A certificate from the statutory auditor with reference to the position of the company at the end of the financial year before ended 31st March may be submitted to the regional office of the Department of NBFC. The same is not mandatory. No, just a filler point. Only for NBFC microfinance institution, a certificate from the statutory auditor is required, which is to be submitted to the regional office. We've not studied any provision, so certificate from the statutory auditor is required here. Okay. Regarding the issue involving the embezzlement by the senior sales manager, what is the most appropriate compliance action by Abhinandan under the provisions of the Companies Act? Please select the most suitable option. Most suitable option. As per section 92, every auditor will prepare a return in the prescribed form containing the particulars as they stood on the close of the financial year regarding any penalty or punishment imposed on the company, its directors, officers, and details of compounding of offences and appeals made against its penalty or punishment. As per 143.12 read with Rule 13, if an auditor of a company in the course of performance of his duties as an auditor has reasons to believe that an offence of fraud which involves or is expected to involve an amount of 1 crore or above is being or has been, it shall report the matter to the central government. As per 143.12, again it says amount of 10 crore or above. So it's not 10 crore or above. And as per section 92 of the Companies Act, every auditor will prepare a return in the prescribed form. No, there is no such return. So what is the correct option over here? 1 crore or above. Auditor has fraud to the central government in 143.12. And here there is the fraud of the 4 crore. Right, over and above. Okay. Right. Considering the overall materiality of 2 crore, EQCR believes that Abhinandan should not issue an unmodified opinion. Abhinandan, however, argues that he has not identified any material misstatement. To guide Mr. Abhinandan appropriately, the following option is the most suitable. Right? If the auditor has expressed an unmodified opinion, then the auditor shall describe in the basis for opinion section the reasons for any other matters of which the auditor is aware that would require a modification. Oh my God, unmodified and reasons for modification does not go well together. So no. If there is a material misstatement that relates to non-disclosure of information, auditor will discuss the non-disclosure first with the TCWG and the impact of non-disclosure. Is material not pervasive, then the auditor should issue qualified opinion. When evaluating the outcome of a litigation, auditor should record in the audit report the interest and relationships of the management that may create threats in the litigation and any applicable safeguards to save the company. So threats and safeguards, nothing like that in the report. If the auditor has expressed an unmodified opinion along with the emphasis of matter, then the auditor will describe in the basis for emphasis of matter, something brand new. basis for emphasis of matter. No, no. So if there is a material misstatement, communicate to TCWG. Impact is material but not pervasive, qualified opinion. Okay. On noticing the issue, Abhinandan reported the fraud to audit committee within 2 days of the knowledge of their fraud, waiting for their reply or observation for 45 days. However, neither the audit committee nor the management replied to the auditor till the expiry of 45 days. Kindly guide what the auditor is expected to do when he is not received any reply. So now within 15 days after the expiry of 45 days, now he will give the report on fraud to the central government along with a note that there has been no reply observation, no reply comment from the audit committee management. If the auditor fails to get the reply observation, he shall wait for the next 45 days. Oh my God, he cannot keep on waiting. If the auditor fails to get the reply observation, he will report the matter to the shareholders. If the auditor fails he will forward his report to the central government along with a note. Yes, within 15 days, the details of his report that was forwarded earlier to the board and also mentioned that no reply has been received. If the auditor fails to get the reply, he will forward his report to the CFO of the company. So when it says wait for more next 45 days, report to the shareholders, report to the CFO. No, so you need to report it to the central government. Okay, right? So that covers our case study. Okay.